Focus on Ports, brought to you by Transnet National Ports Authority.
Hello and a warm welcome to Focus on Ports. I'm Lionel Skink. Thanks for joining us. In the last episode, we discussed what the African continent's improving fortunes mean for trade. We also delved into South Africa's ambitious capital expansion program. Now, greater demand for South Africa's resources and increased intra-African trade has inspired a 300 billion rand market demand strategy. We were keen to find out if this demand is sustainable and warrants the kind of infrastructure investment planned over the next 7 years.
After 30 years of insufficient investment in our ports and rail network, we are unable to meet demand. At our ports, we have increasing turnaround times for freight, and our rail network is unable to meet demand. So we've seen a decisive shift from freight being transported by rail to road, which increases transport costs. Transnet's investment plan will see those trends reversed. Transport costs of freight should decrease as freight transportation increases by rail and decreases by road, and our ports will be better able to cope with increasing demand. It's also important to note here that maintenance for existing infrastructure and the infrastructure that will be built over the next 7 years won't be compromised, so we shouldn't see a repeat of the situation that we're in now. The first challenge, I think, which we need to talk about is that Transnet cannot finance all of the projects from its own cash flows. It can only fund 70%. So it needs to get 90 billion rand from external funding. This looks promising though, because Transnet's $1 billion international bond was oversubscribed, and the company seems fairly confident that it will be able to raise these financial resources. Also in South Africa, we have the question of skills. We have a huge shortage of skilled professionals and engineers, and it's vital that Transnet secures these skills and retains them in order to meet the goals and targets set out in the market demand strategy. If they don't secure those skills, then it will be very difficult, if not impossible, for the growth plan to work. I think the market demand strategy is very exciting for potential investors. Transnet is set to become the fourth largest freight rail transport company globally and a leading exporter of coal, manganese and iron ore globally as well. In terms of international and regional trade within South Africa, that will definitely increase. The challenge going forward will be increasing intra-African trade. The investment plan will certainly secure and cement South Africa's position as the logistics hub of Southern Africa. But even with $150 billion being invested in transport infrastructure in the sub-Saharan African region, it's unlikely that investment, even of that magnitude, will raise transport infrastructure to the standard that we have in South Africa. At the moment, container dwell times in Eastern, West and Central Africa can be anywhere between 5 and 30 days, where the international standard is 7. And freight transport by rail is somewhere between 2 and 11%, depending on which region we're talking about, which is very, very low compared to Southern Africa, where it's almost 85%. So transport infrastructure needs to be improved dramatically, and cross-border efficiencies as well, so that transported freight can move quicker and costs are reduced.
Now today on Focus on Ports, we continue tracking South Africa's response to the increasing market demand. Later on in the show, we will also look at the transformation at the National Ports Authority as far as skills development is concerned. But first, please welcome Thabo Morwe, Chief Executive of Transnet National Ports Authority. He's here to discuss and further dissect their market demand strategy. Mr. Morwe, thank you very much for joining us for our second show, Focus on Ports.
Thank you for the invite.
Wow. We're talking about the market demand strategy, and the key and the cornerstone of the market demand strategy is infrastructure investment, and this will then result in growth of the economy, South Africa's economy going forward. But just talk to me about the importance about investment in infrastructure as a key component in South Africa's national growth path.
I think the key to this strategy is that in order to grow the economy, you have to create the necessary infrastructure. And when one talks about ports, one particularly talks about the export-import of various commodities and other goods. So from a capacity point of view, we must have the necessary capacity to be able to carry that through. But if you look at Transnet, not only does it house ports, it also houses the rail and the pipeline sector. So one is also talking about infrastructure within rail and within pipelines.
But your particular focus is on the ports. And I know the lion's share of the 300 billion market demand strategy is going to go towards the rail side of the business, about 85 billion coming towards your area of responsibility, which is ports. Just to remind us again the importance of the freight system with regards to economic growth in South Africa, in any country for that matter.
Yeah, I think if you look at the National Port Authority, of that 85 billion, 46.9 billion is specifically targeted towards the National Ports Authority. And our key responsibility in terms of the National Ports Act is creating capacity ahead of demand to ensure that when the goods come to the port or leave the port, there is the necessary capacity to handle that. Now, if you look at any major port city in the world, cities develop around ports. It's first the port, then the city. Typical example, I just came back from India recently, and in their infrastructure development plan, I mean, on the East Coast, they'll be building 16 ports, which just shows the key role that ports play in economic growth, and we are doing the same thing.
We're talking about the market demand strategy. We're talking about the South African National Ports Authority responding to a demand, and that demand, as we said in our intro, is increased intra-African trade, and the fact that there's going to be a lot more trade taking place with the African continent, with South Africa as a gateway. Right. So just tell me about that demand. What is the scope of the demand? What is the extent of the demand? And particularly because that is what you actually called your strategy. You are actually responding to that demand.
Yeah. To give you an example, by 2040, the demand for coal would be setting at 240 million tons. That is the estimate for the South African market.
Is this per annum?
No, it's over. By 240, we must have created that capacity.
Okay.
Currently, in terms of export coal, I think we are just above 70 million tons. If you look at the port of Richards Bay, theoretical capacity of 91 million tons. So we need to do something now and urgently to ensure that by 2040, South Africa is able to deliver and export 240 million tons. If you look at manganese, we've got the best manganese in the world. Yet, in terms of exports, we are just doing under 5 million. The idea is to create capacity to start exporting above 16 to 20 million tons. So that's the type of demand that we're talking about. Within the ports. We also need to ensure that on the container side, we have got adequate capacity in terms of rail terminals to have more containers moving on rail rather than on road. So those are the type of projects that we're looking at, that we're working on.
Now, I'm glad you picked up the whole issue about the importance of rail. I know we're talking about ports here because it's focused on ports, but in the bigger scheme of things, the use of rail, the extensive use of rail, brings down the cost of doing business, doesn't it?
No, it does.
And brings efficiencies to the system. Could you perhaps elaborate on that?
Well, it's much cheaper to move rail-friendly cargo on rail rather than on road. Hence, bulk of export coal moves on rail. It has also been found that if you look at containerized cargo moving between Joburg and Durban, it's cheaper to move containers on rail rather than on road.
How much cheaper are we talking?
Well, it's most probably 30-40% cheaper.
Wow.
To do that.
And I think as well, the other imperative there is that it's much more environmentally friendly.
It's much more environmentally friendly. What we should be working on, what we are working on, is ensuring that when the trains arrive at the ports, there is a facility in terms of ensuring that they load, offload quickly for the return journey, so that you don't have trains standing for a considerable period at the port because of lack of rail terminal capacity.
That's right. But at the moment, what is the situation, Tao? We have an unhealthy reliance on road in our freight or our logistics infrastructure in South Africa, and moving away from road, going towards rail is the actual policy.
I think the South African economy for quite some time has been favoring the bulk commodities, specifically coal, iron ore and manganese. So all the investments in the past on the rail side, a bulk of the investments have been on those commodities and not on what is generally termed general freight, your containers, agricultural products and so forth. With the result that the road sort of gained a large chunk of the market share because of lack of investment. Now, one of the strategies of the market demand strategy, or one of the pivotal points of the market demand strategy, is to address that imbalance. And hence, if you look on the investments on the rail side, it's on the agricultural side, it's on containers and so forth.
Before we go to the break, this is something that is going to come up, and I'm sure you get a lot of questions around it. It's a 300 billion capital expansion program. It's, as you've explained, it's in response to a market demand that we foresee coming up. But that 300 billion, the funding or the revenue of it, where is it going to come from? A lot of people have the impression that it's spoon-fed by the National Treasury. Do you want to perhaps elaborate on where are those funds going to come from?
No, the funds are going to come off of Transnet's balance sheet. In other words, the funding would be off of Transnet's balance sheet. I think the group chief executive, Mr. Molefe, clearly indicated that about 200 billion of that would be from the funds of Transnet. About 100 billion would be from the open market. So government is not going to put a single penny in the funding of
So
that.
the money is coming from the operational revenue generated by the business.
Exactly.
And
exactly
at current levels.
At current levels, yeah.
And let's talk about the risk strategies going forward, because we are more or less in a slump as far as our economies are concerned. We've just come out of a very bad slump, 2008, and we're currently going through a crisis, the sovereign debt crisis in Europe. Do you think we can sustain the revenue going forward to generate that kind of money?
Yeah, we will. Transnet just released its results, and if you look at the numbers coming through, specifically commodities transported on rail, over the 200 million ton mark, which is the first time in the history of Transnet that is happening. If you look on the port side, in the port of Ngqura, just over 500,000 containers coming through. So we've seen the volumes coming through, and even given the past slumps, the impact wasn't long term. It's always been short term, and then we recover.
Well, we're going to have to go for a break, but of course we want to talk about the other opportunities that are going to result as a market demand strategy, and that is jobs, jobs, jobs.
Okay.
Right, the market demand strategy is set to indirectly create some 200,000 jobs. What will this mean for transformation and skills development for the sector as well as the rest of the country? We discuss this after the break. Stay tuned.